The markets are basically up. This is what I call a fraudulent down day. This is just taking a rest before we head to, 4,600 for the ES and 16,000 for the NASDAQ. Not in that particular order, but it does feel like we're going to be going in higher, and we might have a few other down days, which I hope, but today is not a down day. This is definitely a fraudulent down day. This is just a pause. This shouldn't be hurting your account. And if this is hurting your account, then you are way too big. And if your call side is still causing you a problem, this is the time to adjust that call side if you can, because tomorrow could be back up and running. Take a little pause, and tomorrow the NASDAQ can be up another 100 points, the S&P another 20 points, and so forth. So be vigilant about your positions when you get this little tiny rest period. With that said, I am negative on the S&P 500 for at least a short period of time. I think it's a good time to play some short position, but I want to give you my disclaimer. Do not do this trade if you're not comfortable with the call side, and most people are not. I'm comfortable with this call side, so I'm going to do a call spread in the ES because the ES is up over a little over 20% on the year, and I just think that it's going to slow down potentially in September and in October, but we'll see, right? So but we're just going to do it small, and we're going to strategically kind of place these call spreads throughout September to see if we can get a decent little return by the end of October. But we'll see how it plays out. All right, so what we're going to do is go over here to the ES, and this is the S&P 500. This is like the SPY, which is the S&P 500 ETF, and that trades like a stock. And then you have the SPX, which is the cash settled index. These are all the same. This ES is the same as those two. We're going to go out to 45 days, and then we're going to look to place something around the 7 delta. We're going to do a 30-point wide spread here, and we're going to kind of see if we can be at least 5% away from where the current price is. So if we do the percentage calculation and take this short strike, and we go 47.40 minus what the last price is, which is, let's say, 45.20 divided by the last price, which is 45.20, then that gives us about 4.8%. We want to be about 5%, and the volatility is so low, even though it's a little up today, which is giving me some happy feelings that maybe we can have a real down day here soon. But nonetheless, we'll see. So if we kind of make this a little wider, try to make this a 5% at least. So let's go to the 47.50 minus the 45.20 divided by the 45.20. That is 5%. So we're going to go with this one here, and let's see what a 40-point wide looks like. 40-point wide is not bad. Buying power wise, 308. You're getting about $90 before fees and commissions. If we go 30 points, that is almost insignificant with the buying power. So we're going to do that, and we're going to see if we can get filled. We're going to send that here, and that is not going to get filled right away. Let's see what happens if we drop it just a little bit to got a little problem with this TastyWorks platform today. Let's see if this will work. All right, so perfect. So we just got filled on that, and that is going to be the short position that we do in the ES. I want to kind of go back and kind of point out some information on it. So we just did this, and if we go to the curve view, just kind of break down how this short call spread will look. All right, so this is it here, and this right here is the at the money line. This is where it's currently trading at. This is the price right here. And so when you're doing a call spread, you are bearish, you want it to go down. If it goes down, you're going to win 100% of the time. And if it goes down after you put that trade on. But you can also win based on the percentages that we received. You can win about 93% of the time if it goes up, because we were at what, the 7 delta, give or take. This is so this is a little off on the futures. Is a little off, but you can have a high probability of winning. About a 93, high 90 or low 90% chance of winning on this trade, even if it goes up. Obviously, we don't want it to go up a lot, but the way the market has been going, this could be tested, but I'm okay with strategically placing this and giving me enough room to be able to deal with the upside. Maybe I think we're overdone. We've been overdone for quite some time. The market is, up 20% after being up last year during a COVID time, after being up almost, every year since 2009. So it seems to be a good thing to kind of play the call side from time to time, but be vigilant about it, because this market it's got a tendency to really kind of punish people to the upside right now. All right, so that's the trade that I want to do on this call